All right, so today we are putting together the ultimate playbook for anyone outside the US who's looking to break into the American market. We're going to go deep, talking about how to set up your business, how to get bank accounts, and how to handle all the tricky compliance rules that can really trip you up. So, how does this whole thing really work? You might think it's as simple as clicking a few buttons online and you're all set. But honestly, the reality is more like a strategic minefield. And if you get it wrong, you could be looking at frozen funds or your entire business grinding to a halt. And that's exactly why what we're doing here isn't just another how-to guide. We are breaking down the expert-level strategies, the little-known details, the stuff you absolutely need to know to not just get by, but to actually succeed in the US financial system. Okay, so before we dive into the nuts and bolts of how to do all this, we need to get crystal clear on the why. Seriously, understanding your main reason for coming to the US market is the bedrock for every single decision you're going to make after this. And really, it all comes down to one simple truth. Customers in the US love things to be easy. If you have a US company and a US bank account, you remove all the friction. It just makes it seamless for them to pay you in good old US dollars. That access, plus the stability of the dollar itself, well, that's the #1 reason international founders make this move. Right, let's start building. We're going to lay the foundation for your entire US presence, and that starts with the legal structure that makes everything else work. And that structure is almost always the limited liability company, or LLC. So why is this the go-to choice? Well, first, it protects your personal assets, which is huge. But the real secret sauce is its pass-through taxation. For most non-residents who don't have a physical office or employees in the US, this means the LLC itself doesn't pay US income tax. That's a game changer. The process for getting one up and running is actually pretty straightforward when you know the map. First, you pick your state. Then you find a good service to handle the local paperwork. You file the registration, and then you get what's called an employer identification number, or EIN, from the IRS. It's a clear, step-by-step path.
Now, your first big decision, and it's a really important one, is which state to register in. Wyoming is a huge favorite for non-residents. Why? It's fast, it's pretty cheap, and the privacy is excellent. Delaware, on the other hand, that's the gold standard if you're building something complex, maybe hoping to get venture capital down the line. And then you have Florida, which is a fantastic low-cost option, but it has one catch. You usually need a friend or family member on the ground there to act as your agent.
Okay, and here is a massive pro tip that'll save you weeks, maybe even a month of just waiting around. See, most of these formation services will mail your EIN application, and that process is slow. But what they don't always tell you is that you can just call the IRS directly yourself. You answer a few questions, and boom, you get your EIN over the phone in like 15 minutes. This is huge because it means you can get to the banking part way faster.
All right, let's talk about the engine of this whole operation. How you're actually going to open your accounts, take in payments, and manage your cash. This is where things get really interesting and where you really have to understand the risks.
You've basically got 3 main paths to get a US bank account. Path 1, you can fly to the US and open one in person. This gives you the most control. Path 2, you can use your new LLC to apply for an online-only account with a Fintech company. It's fast, no travel, but there can be restrictions. Or Path 3, you could hire a US-based manager to open an account for you. But let me be crystal clear about this last one. It comes with enormous risk. You're giving someone else total control over your money. If they decide to disappear, your money disappears with them. Okay, so let's say you do decide to go in person. You might walk into a bank branch and have the staff tell you that you need an ITIN or a social security number. This is a super common myth. It is absolutely not a legal requirement to have one. If this happens to you, the best thing to do is just be polite, say thank you, and walk out. Then just go try another branch or a different bank altogether. Now we need to talk about a major threat that so many entrepreneurs just don't see coming. It's called platform risk.
A lot of people rely on just one payment service, like Wise or Revolut. These are fantastic tools, but they're not traditional banks. And the scary part is, your account can be frozen or even shut down with almost no warning, which can instantly choke off your business's entire cash flow.
So what's the move here? It's simple. You have to build financial redundancy. Never ever have a single point of failure. You need to spread your risk across a few strong alternatives. Airwallex is a fantastic, robust competitor that's great for growing businesses. Payoneer can be a real lifesaver, especially if you're from a country that other platforms might consider high risk. GetMeU is known for having a really quick and easy setup process. And of course, Revolut is a giant, especially in Europe. The core strategy here is to have at least 2 of these up and running at all times.
Okay, now for a super important piece of the puzzle that often gets overlooked: staying compliant. I mean, getting set up is one thing, but operating by the rules and managing your legal risk, that's what's going to keep you in the game for the long haul.
So your first line of defense in the compliance game is a little form called the W-8BEN. Whenever a US company is about to pay you, they're going to ask for this. All you're doing is officially telling them, hey, I'm not a US person. Why does this matter? Because it tells them not to withhold US taxes from your payments. It's a simple form, but it is absolutely vital. Now let's get into something a bit trickier. There's a new law in town called the Corporate Transparency Act, or CTA. It basically says that most small businesses, including your LLC, now have to file a report with the government telling them who the real owners of the company are. But, and this is a big but, here's the plot twist. A federal court recently ruled that this whole law is unconstitutional. The judge basically said Congress went too far. And that decision has thrown this entire reporting requirement into a state of total chaos and uncertainty. Which of course brings us to the million-dollar question that every single person with an LLC is asking right now. What's the smart move? With the law being challenged in court, do you file this report or do you hold off? Well, the logical, risk-based strategy really depends on just one thing: when your LLC was created. If you just formed your LLC this year, in 2024 or later, the law is still technically active for you. The safest bet, the conservative play, is to just file the report and avoid any potential headaches. But if your LLC was created before 2024, you've got until the start of 2025 to file. So for you, the strategic move is to just wait. See how the government's appeal of that court case goes, put a reminder on your calendar for December, and check back then. Whew, okay, we have covered a ton of ground. So let's zoom out and boil all of this down into the core principles, the key takeaways that should guide every single move you make. This whole playbook really stands on 4 pillars. Number 1, prioritize your privacy right from the start by using a structure like a Wyoming LLC. Number 2, get really smart about banking risk, always balancing how easy something is versus how much control you actually have. Number 3, build a business that can't be easily broken by having more than one way to move your money. And number 4, stay on top of the rules. Actively watch out things like the CTA are developing. So there you have it. This is the strategic blueprint. It's about so much more than just checking boxes. It's about making smart, defensive choices to build a US business that's strong and resilient. You have the plan. The only question is, are you ready to build?